Right, we've got 5 young adults here that range between 19 and 28. All of them have a diagnosis of autism. They're on various aspects of the spectrum, if you will. So we've got some service users that are non-verbal, some service users that are very verbal, and we've got some service users that need some sort of physical support in certain areas.
I've got a little brother that's got cerebral palsy, global theometric delay and curvature of the spine. And yeah, just basically growing up, it's always been, he's in and out of hospital, he's had to have different treatments, people come out and see him. So it's kind of one of the things that you get used to seeing, you're learning things from what's happening with him. And I don't know, I guess it just turned me into the person I am today that can do this job.
I was in the army for 15 years. I left the army and I was a bodyguard with the Sergeant Royal family for 8 years. I had a friend that was looking after, an ex-soldier friend of mine who was looking after an elderly gentleman in Cambridge, an ex-professor. So I sort of like started to fill in that role, and I was just sort of looking after him on a sort of a monthly basis sort of thing. His needs increased, then it became a full-time job. Then he passed away and I was at a bit of a loss, and someone who was very close to him said, why don't you do it as another career path? So that's how I ended up in care.
I was actually in the armed forces, in the Navy, and I just wanted to work with people. I had a relative that had autism and I got on quite well with them. It sort of floated my boat and I thought I need to go down that route when I leave. And you know, it's 38 years that I thoroughly enjoyed. You know, I mean, I retired, what, 4 years? And I'm going to miss it. You know, I'm going to miss it.
I wake up every day and want to come to work. Even on my days off, I'll like phone up and be like, do you need anybody today? And I just love it. I just love being here. The atmosphere is great, and knowing that I can make a difference in the service users' lives by letting them fulfill it is great.
I'm going to miss the relationship. Some of the things that happen, some of the things that occur can be so rewarding, can actually fill you up, can make you laugh, can make you cry.
Just being able to give the service users the chance at a normal life, really. Being able to go out into the community and do whatever they want, just seeing the smiles on the faces and, yeah, just making them happy.
We can give you the tools. We can teach you about autism or whatever sort of diagnosis you're working with. We can give you the training, you can get the MBQs, and you just apply and build yourself up. But I think initially the first thing you need is that caring attitude. You know, we call the care service and that's what we do, we care.
I thought it was more elderly type and things like that. I never really thought of like the disability aspects of it and that. But ever since like coming here, and it's definitely opened my eyes that there is a lot more to care than just like people thinking it's elderly. It's a massive wide variety. My perceptions of it was like it was going to be elderly, and then when they were saying like, oh, it's challenging behaviour, I thought it was going to be like incident after incident every single day, but it's really none of that. The job is great, and if anybody is to get into care and they come into this side of it, it's absolutely amazing. They will literally love it.
Good morning, everybody. Can I welcome... Oh, sorry, Anne, I'll just let Anne take a seat. That's great. Thank you. No, it's okay. Thank you. Okay, good morning, everybody. Can I welcome you to this Pension Fund Committee, and also welcome any members of the public that are watching online. My name is Eric Kerry. I'm Chairman of the Pension Fund Committee, and I will remind members that actually this meeting is being broadcast live. If any guests are attending remotely, please remind members to use their microphones when speaking so they can be heard by the remote attendees. Before we begin the meeting, I'd like to remind those members of the public that are present that placards, banners, etc. are not permitted, should remain seated. You may record proceedings, and mobile phones and other devices must be switched to silent. Before we move to the business of the meeting, I would like to begin by reading a statement that has been released in response to Russia's invasion of Ukraine. I know that members have seen this, but I think it's very important that the members of the public also are aware of this. So, as Chairman of the Nottinghamshire Pension Fund, I've asked our external managers not to increase existing exposures to Russia, as well as to unwind our current positions when the markets and legal environment permit. This follows the unprovoked and aggressive attack by Putin's regime in Ukraine. Investment managers have spent the last few days reviewing the 6.6 billion pension fund for Russian links and have found the fund holds less than 0.1% of Russian assets, and I thank them for their hard work. This is based on the following considerations: that firstly, the world has changed irrevocably within the past few weeks, and so have our financial markets. I've watched events in Ukraine unfold with great concern. My thoughts are with the people of Ukraine currently having to deal with the resulting calamity and displacement caused by Russia's military invasion, and the people of Russia who are also suffering as a result of actions of their government. The Nottinghamshire Pension Fund will stand with others who are calling for a swift and peaceful end to the conflict, but nevertheless recognise that any resolution will take time and result in a prolonged period of uncertainty. Given the increasing pace and scale of Russia's military aggression, I consider it incompatible with our mandate as responsible investors to either maintain or benefit from any exposure to Russian securities. This is especially so given the intricate nature of the ties and connections between the Russian government and companies that operate within Russia. The likely event of reduced transparency and weakened governance in Russian corporates raises serious ESG questions and concerns, and compromises our ability and the ability of our managers to analyse Russian stocks in the holistic manner expected of responsible investors. The Nottinghamshire Pension Fund consider this stance to be in keeping with that of the global community who stand opposed to military aggression and injustice. There can be no doubt that the implementation of these requests will take time, given the current market conditions. We will endeavour to take a considered and prudent approach, which incorporates our fiduciary duty to all of our pensioner members. The fund will continue to closely monitor the situation in Ukraine, and will review our position as and when events take a substantive different turn, and the isolation of the Russian economy is deemed no longer necessary by the international community. Our hearts go out with the people of Ukraine and anybody affected by this abhorrent war. Thank you, members and guests, for allowing me to do this morning, and I'll now move on to the formal meeting. So the first item is the minutes of the last meeting held on the 2nd of February 2022. May I ask if the committee can approve that those minutes are agreed? Can I see hands in favour, please? Thank you very much. That's unanimous. Item number 2 is apologies for absence. May I ask Joe Toomey to confirm any apologies and substitutions, please?
Thank you. We've no substitutions today, but we do have apologies from Alan Woodward, the trade union representative, and Sue Reader, the scheduled bodies representative.
Thank you, Joe. Does anybody aware of any other apologies? I don't think so, no. Thank you very much. I move on to item number 3, which is declarations of interest by members and officers. Firstly, A, do we have any members or officers present have any disclosable pecuniary interest to declare? I see no indications. Secondly, do any members or officers present have any private interests, either pecuniary or non-pecuniary, to declare? Again, I see no indication, so thank you. I know, excuse me, move on to item number 4, which is the Local Government Pension Scheme Conference, which was held in January 22, and in January, Councillor Steve Garner and Pension Manager John Clues attended the conference. Before I hand over to John and Councillor Garner to highlight any areas that may be of interest to committee members, I move the recommendation set out on page 13 of the agenda pack, and would like to propose that recommendation.
I'll second that
and I
and
have a
reserve
second.
the right.
Thank you very much, Councillor Camilleri. Okay, I'd like to hand over to John, if you'd like to take us through the report, please. So I'll switch.
Mine. Oh, it is. Sorry. Thank you. All right. Thank you, Chair. Just in terms of the report, obviously things have changed since 2020, since January. So I'll just take you through various main points of some of the sessions. We have a conference every year, and it is really important that we do attend these conferences, as it tends to obviously pick up some of the main issues that certainly administration face over the coming or future year. So I'll take you through. So we were welcomed to the conference, which highlighted some of the main challenges for the coming year. In particular, we were highlighted about inflation. We've already talked about the McLeod case in previous committee meetings, but that is certainly high on the agenda. We also looked at some of the main themes that were going to be discussed, which was administration, governance, and compliance. The first presentation took us and wanted to highlight and understand the views of scheme members in relation to greater scheme engagement, and that was really just to see how schemes were actually engaging their members, and there were suggestions about using a type of software system to use as engagement, but that's covered in the report. The next main item was from the Scheme Advisory Board, and this picked up on some important themes. It highlighted the difficult environment that pensions administration in particular had been dealing with in relation to the impact of COVID, and we're still dealing with that, plus growing regulatory compliance. It also highlighted some of the main things on the horizon, as I've said earlier, about McLeod, the exit cap, the regulator's single code of practice, which will be coming in, the valuation, good governance, and pensions dashboards, which is due to come in 2024. So that kept us on our toes. The next session of the conference was a discussion about disinvestment and focused around engaging with fossil fuel companies and how to promote change. Further session was presented by John Richards, the Assistant General Secretary of Unison, and talked about working with the Scheme Advisory Board and how funds had handled the pandemic, along with stating how important pension administration actually is. To end the day, there was a panel session on the valuation and picked out some of the main topics that had been presented to committee by the scheme actuary, Barry Mackay. Day 2, the conference had a presentation on cyber security and pension scams. Again, we've brought a report around pension scams and we're currently doing some work on cyber security. The presentation also focused on the pension regulator single code of practice, which has a focus on cyber risk. And again, that is something that the committee will need to be aware of in the coming year in relation to the regulator's code, and we'll bring a report on that as and when we can. The next presentation came from the Department of Levelling Up and Housing and Communities, which focused on the timetable for McLeod and the impact of McLeod on the LGPS. We're due to have the new regulations sometime in spring, whenever spring finishes, but they also updated the conference on topics that are on the horizon. The conference was then presented with a legal update, again focusing on the pensions regulator single code of practice, and once agreed, the fund will need to complete its own risk assessment against the code. The presentation also went on to focus on pension scams, which is becoming rather arduous for administering authorities. And again, we've brought a report to committee on that. Then came a presentation on the Stewardship's code, and the conference closed with investment outlook. And I apologise for my teeth, they seem to be moving about this morning. So that was the end of the real conference. So if there's any questions, happy to take them.
Thank you, John. Thank you for very comprehensive reports, and it sounds like very hard work. And I know that a lot of the stuff is on our radar, we're all prepared for this. But I do believe that there will be an increase in regulatory things coming through in the future, and we just need to be aware of the potential impact of those.
Indeed, the regulator's code is going to have, I wouldn't say significant impact, but certainly a significant piece of work to do.
Okay. I'd like to open that up to members' questions, comments, please. Steve.
Okay, right, yeah. Well, I've been on a couple of conferences. This was the best one I've been on. It was very informative, more so than the others. And all speakers was very eloquent on everything. So it was a thorough, enjoyable conference, and it sort of flew by as opposed to taking time. So yes, talked about all the issues what Johnny alluded to. So yes, very good.
Thank you, Councillor Garner, for those comments. Can I just reiterate that we do have a number of other conferences that we're able to attend in this year and coming years, and I'm sure Tamsin has a list of those where there might be still some vacancies, and I would encourage members to get involved and increase their training through the conferences and other matters. So Tamsin, I'm sure you'll be in contact with members.
We're specifically looking for somebody to attend this conference next January, 19th and 20th of January next year. So if anybody would like to volunteer, that would be great.
And I think we have two places on that for members, possibly?
There are 2 places for members. We've also added another place for a member of the pension board.
Right, thank you. Thank you very much. And sorry, before I just need to come in again. The issues with the pension board regulation, all that kind of stuff. The scheme advisory board. There is a scheme advisory meeting next week, next Thursday. I'm going to be attending, and if any other members want to come along, you're welcome to do so. Thank you. Any other questions or comments, please? Mike, Councillor Pringle.
Yeah, thanks, Chairman. I see that climate issues I mentioned a couple of times. There's no direct mention of COP26 or the movement within the proposals that were made at COP26. Was that discussed at all? Anybody?
To be honest, Councillor Pringle, I can't remember. But I think that it came up in the discussions, but clearly they were focusing on the presentation that they had. So all I can say, it might have done. I can't honestly remember. It was more governance issues. Yeah. They on just, I suppose, on the presentation around disinvestment. That was, how can I? It was described. There were two people talking about their views on disinvestment and how it should be engaged and talked about. They weren't opposed to disinvestment. They were just talking about how it should be done, and there were different views on how that would work, and that was the main highlight of that particular presentation.
Okay, thank you, Mike. I'm sure there's going to be other opportunities in our risk assessment, all those things going on future. Steve, you want to clarify on COP?
Yes, I'll just clarify that. Regarding COP26, it came up with the Friends of the Earth, Jill Davey, on diversing now. She brought it up a few times in comments. They had a debate of, it was like one side and other side debating it, and it kept coming out, on that side. So it was debated. Yeah.
Okay, just a quick one, Mike, please.
Yeah, just a quick one. Yeah, but again, COP26 and this variation debating. What direction are people taking? That's what I was looking for. If we're at a conference and somebody's taking one direction or another, that's the sort of thing I'll be looking at, not listening to Friends of the Earth as compared to pensions investment, because we know that there'll be a balance. That's different.
Okay. So I've been involved in. I was at the APPG for Just Transition and for divestment, whatever, the other day, and the message still is, and coming through from LAPF, etc., that engagement is still the best way to try and get change to get the net zero target. So we still believe that's the overarching philosophy, policy, whatever you want to call it. But obviously, it doesn't work in every second. And if there's issues that need addressing, we'll address them. Okay, thank you very much. So we've had the debate. We've moved seconded the recommendation. Can I see all those in favour, please? Thank you. That's unanimous. Okay, moving now on to item number 5, which is the Strategic Asset Allocation Working Party, starting on page 15 of the agenda pack. I'll move the recommendation, which is on page 19. Ask for a seconder.
Yeah, I'll second that and reserve the right.
Thank you, Councillor Camilleri. Tamsin, would you like to take us through the report, please?
Thank you, Chair. Members are aware of the well-attended working party in January strategy of the pension fund in detail, and as a result, the following recommendations are made to committee. Invest 5% of the fund in the LGPS Central Global Sustainable Equity Fund. Change the equity benchmark used to monitor equity investments in the specialist portfolio to a composite consisting of 50% Japan, 50% Europe in sterling. Reallocate the Darwin investments to the inflation category, specifically the Darwin Leisure Property and Darwin Leisure Development Funds to real estate and Darwin Bereavement Fund to infrastructure. Reduce the strategic asset allocation private equity allocation from 6.5% to 6% and raise listed developed market equity from 48.5% to 49%. And amend the final statement of the investment strategy statement, paragraph 53, to allow commitments to exceed asset allocation. Amend the strategic asset allocation inflation category subclass allocations as shown in table 1, which is a decrease in our allocation to property and an increase in our allocation to infrastructure, just a high-level summary of those, and to continue to monitor the exposure to the tobacco sector. Following the discussions on the strategic asset allocation, climate risk training was provided by LGPS Central. Thank you, Chair.
Thank you, Tamsin. The meeting, the working group went on for 2.5 hours plus, and it was a very, very, very useful meeting. Very, very detailed. Lots of really hard decisions to be made. A lot of interesting decisions to be made. The recommendations are on page 19, as Tamsin has mentioned. There's quite a lot of stuff coming out, and actually, we believe that the way that we're now our portfolio is diversified puts us in very good stead. for the future of the fund. William, do you want to make any comments about that, please?
Yeah, I think the only kind of comments I'd make is that, first of all, there are no changes to the high-level strategic asset allocation. And slight kind of heads up, when I come to talk about what's happened more recently, I'm not going to recommend any further changes. It's very rarely right for a long-term fund to react to such short-term events. We need to kind of work out what's going to happen. Recommendations 2 to 4 are really purely presentational about how we report things to you. There's nothing at all material in them. Recommendation 5 is a slight change, but it doesn't involve selling anything. It is simply kind of where we allocate our capital, a bit more to infrastructure, a bit less to real estate. And on tobacco, there's been a huge decrease in the fund's exposure. And the question really was, should we say none at all? Or should we just kind of live with a very small exposure? The cost of going to zero was going to be pretty high, and my view is that as a result of legislation in the EU and elsewhere, you're going to find most managers choosing not to invest in tobacco. So you're going to get very close to zero tobacco without actually going through the cost and effort of going to an exclusion policy. Thank you, Chair.
Thank you very much, William. Okay, I'll open that up to questions and comments from members, please. Councillor Waters, Lee.
Thank you, Mr. Chairman. Again, apologies, Chairman, that I was too poorly that I could not attend the working group in person. Perhaps following this council's spending of £437,000 on a couple microphones and a TV stand, we would consider hybrid working groups for members in future. In one breath, the committee recommends a 5% allocation in a sustainable equity fund. In another, you state you will still continue to invest in tobacco. Either you are ethical or you are not. It seems to me you have segregated sustainable investments for PR purposes, but you have buried, or in some cases increased, your exposure to unethical investments within your general holdings. If you have segregated out ethical and sustainable stocks, why have you not segregated out all of your sin stocks that are invested in, as an example, fossil fuels, alcohol, tobacco, drugs, weapons, gambling, pornography, that this fund is exposed to? Would you agree that to the average member, this fund may be as transparent as the Kremlin? If you wanted to, all of your holdings could be ethically and sustainably invested. You have established that you can sustainably and ethically invest with your 5% allocation. Why not nearer to 100? Thank you, Chairman.
Thank you, Councillor Waters. My initial comment is that when it comes to ethical or other investments, we have a fiduciary duty to our pensioners to deliver the returns that enable us to pay pensions over decades to come, many decades to come. And unless we know totally that that our members want us to divest from such investments that you mentioned, it's very difficult for us to do that. And we mentioned in the comments that William has just mentioned about the methodology in achieving any such divestments. It's not necessarily an appropriate and best way to do it. William, do you want to add any more to that, William, please?
Yeah, I mean, I think a few comments. One is that the ambition to, the plan to invest 5% of the fund into sustainable, which we actually did last year, and this has taken a year and a half to get there because Central have been so slow. I see this as being the first step in a journey. The fund is a new fund, a new sub-fund of Central's, and it would not be. I don't think it'd be good governance to kind of put all our equity exposure into that in one move. If it is successful and if it is it clearly returns more than or as much as the main funds, we may consider putting more in the future. The problem with divestment, as I think I do describe briefly in my working party paper, is that the difficulty of deciding what is a sin stock and what isn't. And it's really very difficult indeed. And it isn't simple. You can't just say X is a sin stock, B is not, Y is not. It just doesn't work that. It's not that easy. Third point is really about the cost. There is an element of it does cost more to invest in more in indices which exclude or certain areas. We invest passively for two main reasons. One is to keep the cost down.
Yeah.
Secondly, we can always be wrong about things, and it kind of mitigates the risk of our being wrong.
Yeah.
I mean, just look at fossil fuels over the last few months. It's only a short period. I'm not going to say that we should definitely invest in fossil fuels because of performance in the short term, but they have performed very well relative to other stocks in the last few months, and holding passive mitigates the risk of not being exposed to that. I didn't quite get the point about the increase in sin stocks. If anything, tobacco's gone down, fossil fuels have over time gone down, maybe not in the last few months, but that is market movements. I think those would be my comments kind of in response. I don't think there's any inconsistency in what we're doing by investing in sustainable and the general desire not to invest in undesirable, let's call them Russian stocks. Sorry, I spoke for a long time.
No, thank you. It's very important that you explain that in the way you did, William. Thank you. Any other questions or comments? Mike, Councillor Introna.
Thank you, Mr. Chairman. Overall, I found it a very positive working party. There seemed to be a genuinely, dare I say, apolitical approach where discussions were able to be had by everyone, where we were able to query so that we could understand, and we were able, in some cases, as we did, to challenge constructively some of the debate that was taking place. And importantly, I thought everybody was given time to do just that. It wasn't rushed, it wasn't hurried. So on the whole, a very rewarding session. I'd just like to say thank you to you all that put that together.
Thank you. Any other questions, comments? Sheila, Councillor Place.
As a daughter of a mother that smoked a lot, I'm going to say I'm totally against smoking, but I'd rather people smoke cigarettes that have been made properly than these that we're getting on the streets for cut price and you don't know what's in them, do you? I'd rather keep a few shares and make sure people are getting cigarettes that we know we can treat if they get cancer or whatever.
Yes, I think you made the same comment in the meeting, Sheila, and you made it very well. Mike, Councillor Pringle.
Thanks, Chairman. Obviously, when we were discussing this, and it was a strong discussion, and questions were balanced from all sides in what I said. I don't necessarily just disrespect what Councillor Walter's saying, and there's very important points here that we need to work with. But at that point, we weren't actually recognising any of the wars that were happening in the world. However, we are recognising the war in Russia now, and is that going to impact anything that we discussed and put forward previously into the long-term expectations that you view to us at all, William?
Sorry, I'm being very deaf. I didn't quite catch the point there. I'm sorry.
Sorry, William. Obviously
the point is, so what Councillor Pringle's trying to introduce is developments in Russia and the impact on our future investments.
You heard the chairman's statement, which I think we would all agree with. It is quite complex. I understand Schroders are going to bring their RI person here today, and I suggest you ask him about the practicalities of actually divesting from Russia. Very briefly, it's fairly easy to say, let's not buy any more Russian assets. That's fairly easy. It's actually a little bit more complex than that because we are not making the investment decisions. We invest through funds and they make the decisions. It's more difficult to say, let's sell our existing Russian assets simply because there is no market to sell. I think we would be better off looking kind of forward at what non-Russian entities actually have business in Russia. And on the one hand, you've got companies like BP who own assets. On the other hand, you've got companies, and again, you may hear from this afternoon from RWC in training, who own a company called Hive, who have a perfectly legitimate exhibitions business in Russia. And the question is what you do with them. And that's why I said it's really very complex. And I suggest that the committee spend some time with Schroders this morning and with RWC this afternoon, just to explore what they're doing to get a sense of kind of how best to deal with it. But I think our sentiment is completely with you.
Okay, Mike. Yes, it will. Yes, thank you. Any other questions or comments, please? Okay, so we've moved the recommendations on page 19. I'd like to put that to the vote then, please. All those in favour? Thank you. Are there any any against? Okay, one against and no abstentions. Thank you. It's carried. Thank you very much for your help. Moving on to item 6, and I guess it's the independent advisor's report. So it's now your opportunity to take it a little bit further if you wish. So I'll move the recommendation.
I'll second that. Reserve the right.
Thank you. William, please, your report.
State the statement of the obvious. Things have changed. Even since I wrote this paper, things have changed a bit. I think what has happened over the last 2 weeks is the turning of the page, certainly in financial history and probably in history. From a market perspective and an economic perspective, I think we have been building up to this change, and the war in the Ukraine is really the catalyst for the actual turning of it. Markets actually have been really quite resilient, considering they have fallen since Russia invaded Ukraine, but they have, it's remarkable. I'm surprised they haven't fallen more. The biggest effect has, of course, been on the price of energy and commodities and food going up. In the long term, this has to be inflationary because the wars are inflationary. And there are all sorts of reasons why they are. They take out supply, they add to demand, and governments don't care about price if they're fighting a war. I think behind that, moving away from the war for a minute, the most important thing which is happening, and this has been happening for the last year or two, is bond yields rising. And that should, and I say should because it doesn't always quite work out as you expect, if inflation goes up, they should rise further. And that is important because it has an impact on the valuation of all investments. And perhaps the biggest market impact over the last 3 months or 4 months has been the fall in tech stocks, because they are really largely jam tomorrow stocks. They promise you lots of income a long way in the future. And the valuation of that today has gone down sharply because bond yields have risen. And in fact, the Nasdaq index is now down about 20% from where its peak last autumn. And that, I think, is a kind of a major, the major thing, almost more than Ukraine from a financial perspective, is what I'm watching. And just as a point, I mean, since the war started, bond yields actually haven't changed very much. Looking forward, I'll spend the rest of the time looking forward at the more long-term, what this really means. I think it means lower returns. We've had above-average returns for the last 20 years, both in bonds and equities. It's not unexpected that returns over the next 10 years might be lower than the actuary expects. And the actuary, when he does his calculations at the evaluation this year, he takes a very long time approach. He will adjust his returns slightly, but I hope he doesn't do it too much. We just have to expect that it's going to be a bit more of a struggle going forward than it has been in the past. I think behind that, I mentioned that the war is inflationary, but the kind of factors in the background are now much more inflationary than deflationary. They've gone into reverse. And some of the things that are happening there are globalization, clearly gone into reverse. I think demographics are probably going to be more inflationary rather than deflationary. And that's because the working age population, particularly China, but also elsewhere, is falling. It was in 1990s, it was rising relative to dependence, it's now falling. So you've got a lower supply of labour, the price of labour should go up. In the very short term, what will impact markets will be the behaviour of central banks. They're aware of inflation, we know they're starting to raise interest rates. The war makes it much more difficult for them to carry on doing that, but they may choose to. And on the one hand, they could do it too much and precipitate a kind of recession. On the other hand, they could say, well, actually, we don't dare raise rates enough, and you end up with inflation kind of taking off in a longer-term way. The fund is, my best judgment is that there's something like a 75% chance that inflation stays under control. I think since the war has started, I might reduce that slightly. I think there's a higher chance of it getting out of control. The scenario that worries me is one of stagflation. Because the way the fund is invested, if income stays below about 4% or so, the fund should be okay. If inflation goes above that, there's no cap to our liabilities. They're CPI linked and there is no cap. And yet inflation at 5% plus, it's quite hard to find assets that actually will protect you. Things like infrastructure, even real estate may do, but probably not totally. Index-linked gilts will, but they're very expensive to buy. So the chances are, if we get inflation like that, the fund's assets are likely not to match our liabilities. Now, there are other defences. There's the cost cap mechanism, which has already been mentioned today. If that happens, if the costs grow too high, more of the burden is transferred from employer contributions to employee contributions. And then ultimately, the government could choose to break the CPI link. So, it's not as if there's no defence, but the point I'm making is that our assets in that scenario probably will not match the liabilities. That all said, as I said earlier, I'm not recommending that we make any major change today, simply because we don't know the future. It's better to have a clearer idea of how this is going to transpire before we make any major change. I'll stop there, and I'm sure there'll be some questions.
Yes, thank you, William, and thank you for all of the different nuances that we're seeing now in the markets globally and in the geopolitical position as well. Any questions or comments? Lee, Councillor Waters.
Thank you, Mr. Chairman. Mr. Chairman, I welcome your comments on the Ukraine. My heart goes out to the innocent people of the Ukraine, and I hope peace will come soon. I want to turn to the independent advisor's report written by William, point 3. So this was the day after the invasion. Point 3 states, the Russian invasion of the Ukraine on the 24th of February was well anticipated. Apart from higher commodity prices, has not at the time of writing affected investors' confidence much. I turn over to page 26 and I look at bullet point 14. Despite the troubling events of the last few days, I do not advise any change to the fund's long-term strategy. It is rarely right for long-term investors such as the fund to react to short-term movements in the market. I disagree with that, and I find those comments quite abhorrent, if I'm honest. For clarity, in the emerging markets allocation, the Knott's pension fund was exposed to 3 million, it's quite significant, 3 million in Russian debt and equity. We can expect this to be written off. This does not include the fund's exposure to other dual-listed Russian stocks, which will also likely be written down. The fund analyst, including this fund's analyst, had predicted for months that a war was imminent. So why did the fund not act sooner to disinvest? The Scottish Parliament acted on the day of the war, as did large sovereign funds like the Norwegian Sovereign Wealth Fund, one of the largest in the world. The Derbyshire scheme acted before the Nottinghamshire pension fund, who actually sat and waited and didn't issue a statement or back down until public pressure became quite immense. If you had properly excluded fossil fuel stocks, as I had been campaigning for, we would have not seen such write-downs. As of September, we had £10 million directly invested in BP, who had to dump parts of their Russian business, again, write-downs, and 30 million in Shell, who last week defied international pressure to buy a cargo of discount Russian oil. Both BP and Shell have said that they are committed to pull out of Russia, but as their businesses are so intrinsically linked to Russia, it will take many years to uncouple. Therefore, if you stand with the people of Ukraine, I ask you to sell these holdings. As of December 2021, we had, when I say we, I mean Nottinghamshire Pension Fund, 156 million allocated to fossil fuel. Chairman, how much of this will be written down due to direct and indirect links to Russia and their war machine? How much is going to regimes in the Middle East, back in civil war in places like Yemen? Chairman, by investing in fossil fuel, this pension fund has blood on its hands. I ask you, Chairman and committee, we need to commit to disinvesting from fossil fuel, and we need to look at the Russian allocation and getting out as quick as possible. And I am shocked and dismayed that we didn't act sooner when the other large pension funds did act. This fund did nothing.
Thank you, Councillor Waters. I'll first respond by saying we were proactive when this started in finding out what the implications and options were. The timing of what we did reflected the knowledge that we had at the time. Things are moving on all the time, and in terms of valuations, valuations change all the time too. William, you asked a couple of specifics there. Would you like to come back on that?
You know, why have we not sold Russian assets? I mean by that Russian domiciled assets. Answer, it is impossible at the moment. What most managers, even passive managers, had to do is to freeze the assets with the hope of selling in the future. Why have we not sold, for example, companies like BP, which have Russian assets or businesses? And remember, there are many, many different kinds of businesses here. There are companies which own assets like, as BP does. There are companies like Hive, which I mentioned earlier, which have a perfectly legitimate business which happen to be in Russia. Again, I come back. I think you should ask Schroders and ask RWC the question of what it looks like in practicality to sell or not sell these assets. Fossil fuels, and you may not like this, but fossil fuels are part of the future for the next 20 or 30 years at least. And that's come really into focus over the last 6 months. Germany is going to go back to coal in the short term because it has no option. So I think the concept that we should just suddenly, kind of pretend fossil fuels didn't exist or try and isolate them from the world, I'm afraid I disagree with Councillor Waters on that point. Why did we not take action? It's very hard for this committee to take action because we invest through funds, and they're the ones who make the decisions what to hold, what not to hold. And I am not aware, and Councillor Waters may know more than I do, I'm not aware of any pension fund that actively sold Russian assets because they thought a war was coming. What is true is at the beginning of this year that we all knew that Putin was amassing forces on the borders of Ukraine, and many people said, but not all, that he would therefore invade. I would be quite surprised, without knowing, if a lot of managers at that point did not choose to remove their Russian assets from their portfolio. And some clearly took a different view, but I think you'll find that most had reduced their Russian investments really quite considerably. I think that's all I want to say on that at the moment, but I hope that answers some of the points.
Nigel, do you want to respond about the about the timing and the process, please, and what your work was done following instructions from us about what we needed to do?
Yeah, thank you, Chairman. Yeah, we acted as quickly as we possibly could, in bearing in mind we still have to have our fiduciary duty in mind in terms of what we can do, and as quite rightly as William has pointed out, in terms of what we possibly can do as a pension committee. So, albeit it's really good news that other pensions committees will actually make a similar statement. In terms of what they can do, in terms of the timing of that, is no difference to the way that we've done in terms of what we've considered quite well in terms of what we can say and what we can do and what we can ask our fund managers to do. You'll be pleased to know that Tamsin, quite rightly, after the statement that the excellent statement that the chairman made on Tuesday, has already instructed our fund managers in terms of what our ask is. So, and quite rightly, what William has said is those questions to the fund managers when they come today for you to ask those in terms of the specific actions. But again, bearing in mind in terms of the limitations that we can, as a committee, do. Thank you, Chair.
I would like to add one thing and two things. Firstly, the decision we made about the timing, we believe was the right timing. We could have said other things at other times and attempted to do some virtue virtue signalling, which we didn't do. We made the statement at absolutely the right time. And if others chose to do it differently, that's their choice. And I don't know the reasons and rationale behind what they said and when they said it, because I know about what we said, and I believe it was the right thing to do. Secondly, about divesting of fossil fuels, and it's about timing now and whatever. If those investments are worthless, as you say, that actually is not necessarily true. Those assets may have a value to somebody that's willing to buy them to exploit them. And if there are oil fields in Russia that they can buy very cheaply and make a lot of money out of, that money could well go to the Russian establishment. And that would not be a solution that I would like to see. So it is more complicated. It is very complicated. And we made absolutely sure that we made the decision of what to do and when to show our ambitions were timed right and for the right reasons. And Mike, I think you wanted to speak.
Please, yeah, Chairman, if I can, and just to say, you know, what's happening in the Ukraine because of the Russian invasion is disgraceful, and it's difficult to separate and not politicise our investments compared to what is happening. But in an attempt to try to do that, any investments that we have in any fossil fuels, whether it's in Russia or America or anywhere in Europe, is something that we realise because of COP26 and all the information that we get reference to the environment is something that we need to move away from. So I think we've got two separate issues here, you know, the directness of what's happening in Russia, and those poor Ukrainian people that are dying, you know, families being moved. It's horrendous, but again, any investment in fossil fuels for me is something that we need to look at. I think we are doing it. Do I think we're moving fast enough? No, you know I don't, but we'll have this conversation at the next 20, 30 meetings that we have. I'm going to change the subject a little bit, I think, because you completely threw me off, William, when you said that if the government broke the link between the CPI, things could change, and I don't quite understand how that would change anything for us or strengthen us.
Yeah. Okay, well, the government, because inflation was so high last year for the state pension, I think it kind of changed. It used to have a triple lock, and it considered whether it should actually break that triple lock. All I'm saying is that if you found a repeat of the 1970s, where inflation was up at kind of 10% for a number of years, the government might, I'm not saying it would do, but I'm saying that if, you know, it might then say, well, actually, we're going to break the link between the LGPS pensions and the CPI. I'm not saying it will happen. I'm just saying that it's a possible defence the government has, you know, if pensions become simply unaffordable. Because the background is that, you know, I mean, in that kind of environment, it's going to be very hard for the assets which this pension fund administers to match inflation.
Okay, I mean, clearly, at the end of the day, should inflation go up and pensions linked to inflation would need to go up, and somebody has to pay for it. Either the fund by getting the right returns on our investments to cover that increase in the cost of paying pensions. But if that doesn't work, then ultimately the employers would have to pay, or the employees, or at the end of the day, government. So it is complicated. We have had training on this, as you know. So we will keep a close look. But what we don't really need to do right now is add any more speculation as to what governments and other people might think of doing. I think we've got a lot on our plate right now to understand what our pension fund is about, where we need to go. Somebody speaker on, sorry. No, yes.
Yeah, thanks, Chairman. So my only overriding concern, without getting into to direct scepticism, is that the returns will invariably come at things that possibly lend itself to a situation that we're trying to move away from, as in whether it's an arms bill or whether it's the the concentration on fossil fuels or whatever. So I would like us to be aware of that and still stick with the direction that we're going in and moving away from that sort of thing, to be honest.
Okay, Mike, absolutely. That's what we do. We're on it every day and take on board your comments, absolutely. Andre, Councillor Camilleri.
Yes, thank you. Yeah, Mike. Thank you. Interesting discussion as always. I'm always amazed at people who work on hindsight and take the chance to grandstand at every given moment. We're not in a climate emergency now. We're in an energy emergency, and things are going to change. Make no mistake. All this world that we're living in now, all this push for that is going to change. I'd like to ask Councillor Waters how he got here this morning. Did he come up? Did he walk? Because that's the only way he could get here without using a fossil fuel. I should imagine. You either caught a bus, you came on a tram. Oh well, that's magically runs on non-fossil fuel. Then I should imagine. It's fossil fuels are here to stay. Can be here for a long time, and it's just the world's going to change in a big way. I think I said it at the last meeting. We're expecting a fall in prices and valuations. It's going to happen. The view of fossil fuels is going to change. We had a planning meeting the other day where we talked about where we're going to get the energy from, and I spoke about Sweden, where they do 52% of their energy is made from incinerators. It's a dirty word in England. They recycle 46% of their materials, and only 1% goes into landfill. This is the future. Why the UK isn't looking how Sweden goes and work that way? When you think that, I think Greta Thunberg's Swedish as well. I think that's it. Somebody told me, well, the reason that Sweden does it low because the weather pattern that we have moves all there because they've got the cleanest air in Europe as well. It moves it towards Russia, so they get all the damage from there. I just think that we've got to be very careful. I mean, this is absolutely frightening what's happening in Ukraine. But our main aim is to look after our pensioners. These people are going to be struggling. Some of these older people on pensions are going to be struggling to heat the houses. The cost of heating's going to double. I don't know if anybody's had their electric bill yet. It's going to double. £1.72 for a litre of petrol. It's going to be incredible. We've got to look after our people. That is our job. I've put here, there's 3 things we've got to do. Look after our pensioners, look after our pensioners, and look after our pensioners. Yes, do what we can. And I think this committee and all the staff do a fantastic job. When this came out, the first thing we spoke about, Eric and I and all the staff, what we're going to do, divest. We're going to look at it. And that's what we've done. And I just think we've got to keep a calm head. The world has changed. And we've got to look after our people. And that's what I want to say.
Okay. Thank you, Andre. Councillor Moore.
Is that working? Can you hear me? Yeah. Well, I wasn't going to say a lot, but Councillor Walters' comments kind of upset me. I worked in the energy industry for over 30 years at a very senior level. At the moment out there, we're generating about 40 gigawatts of energy in this country with a very fine balance between different forms of energy. Today, the wind's blowing and the sun's shining. It's a good day for clean fuels. But during the winter, when it's been bitter cold, the wind hasn't. Now, I'm very, very pleased that this country has got a balance of different fuels. And as has been said, we're going to need fossil fuels in the future. And we are moving towards it. I mean, I've come here today in my electric car, which is a help, I suppose. But next winter, if we are not careful, in Germany, let me just tell you what's happened in Germany. The independence and No, let me finish, please, because I don't say a lot at these meetings. The Germans have said, we'll close our nuclear power stations down, we'll rely on Putin's gas. Bad decision. Here, next winter, if we are not careful, our pensioners, we're going to have a real dilemma. We burn coal and oil, or they freeze to death. Because you can turn electricity off, you can't turn gas off. Once you turn gas off, it's a very, very long job to put gas back on again. Very dangerous. So I am very pleased that this pension fund supports a sensible, balanced policy, which includes your very good policy in terms of energy companies. That's all I've got to say. Thank you.
Thank you. Okay, have we got any, if there's any comments left to make, can it be specifically about the report? I know that there's a wider debate going on elsewhere. I think we're probably at the end of that one, aren't we? So the recommendation, which is not at the bottom of the sheet, it should be to note William's report. Sorry. Oh, Graham, sorry. Yes, please, Graham. I didn't see your hand, sorry.
We're going to go round and round, right, every meeting at this rate, right? I'm just wondering the degree to which our policy is even now fit for purpose, because what we're trying to do is wind our way through what I think is a Rubik cube of ethics. I mean, ethics isn't black and white. If it were, life would be so easy, right? But I mean, you've got to look at the short term, long term. Do you stay in or do you move out? Are you better off staying in and influencing, or are you better off moving out? You know, you've got the financial responsibilities versus the ethical responsibilities, and then, you know, you also, then there will be some need for oil in order to get sustainability going versus getting out of it altogether. So you've got that Rubik cube of stuff, and I don't know whether we could actually get a policy written down which tries to steer through that, so we don't have this interminable debate every time, right? With this, you know, very predictable positions, including mine, right? That's one. My second point is to do with something off-piste, right? And it's to do with inflation. And you were saying, William, that inflation, you know, can be to some degree managed by central banks, and to some degree that can be very, very helpful, right? Not influenced by, okay. But it occurs to me that what the real thing about inflation is productivity, right? And if you are highly productive, you're producing the goods, and therefore what it's doing is supplying the demand, right? And therefore you don't get an excessive demand over supply, right? And I'm just putting a point of the idea of investing in those areas where there's actually a high level of investment, right? So you know that they're going to be, you know, highly productive, and therefore not going to be suffering from inflation. And it certainly isn't this country at the moment, which is unfortunate. And so that's just another point. Thank you.
William, would you like to just come quickly back on that,
Yeah,
please?
a very quick response. I mean, I completely agree with you about Rubik's Cube, but that is why we have a diversified portfolio. We're not going to get everything right. We just have to kind of try and manage the risks by being diversified. But I completely agree that it is not easy. I don't think it is possible, because it's just impossible to predict the future. And the best defense we can do is, you know, as we do, to be diversified. I don't think you can kind of have a policy. And it may be in terms of trying to avoid the debates, I'm afraid that goes back to the chair as to how that's handled.
I mean, we discussed a lot of this at the working group and all that kind of stuff as well. So, and we took a decision from there to propose the recommendation we've already approved in the previous paper. So, and we will come back to it. And if we need some training on that, of what we can and cannot do, we'll organise it. And I hope that's a fair way forward.
Can I just quickly comment on inflation? My point about central banks is that in the short term, they can have a considerable influence as by their policy. If they, as I said earlier, if they decide to raise rates too far, precipitate recession, inflation probably goes down. If they decide to go back to QE to solve the problem, which is what they've done for the last 20 years, then you're going to see inflation going up. That was the point I was trying to make.
Yeah. Okay. Thank you, William. A quick one, please. I think no, you okay.
Thank you, Chair. In the appendix, you can see the work programme for the rest of the committee meetings of the current cycle. April, the next meeting, is the anniversary of the creation of the Fund's Climate Stewardship Plan. Next month, we will bring a report to committee which updates this plan and provides a report on climate-related stewardship activity over the last year. The committee is asked to identify any additional reports required. Thank you, Chair.
Okay, thank you, Tamsin. Are there any questions or comments about the work programme, please? Mike Pringle. Councillor
Thanks,
Pringle.
Chairman. Just to refer back to the link in reference to Rio Tinto and having some sort of report back from the disgraceful things that were shown within the link. I'm sure most members have seen it. If not, I can share it with members, or we can get it shared. But I think it's important that it's seen for all members and that we have some sort of report back in the work.
Okay. Well, I'll take your comments on board, Michael. We'll find a way of doing that. Thank you. Councillor Camilleri.
Yeah, just an observation. We are going through a difficult time, and I think over the next 6 months it can be really difficult. Is there any way that we could be updated on a regular basis? Having a meeting every 6 weeks may not be enough. We've got a lot of money invested, and really we need updating and watching it very closely, because there may be things that we need to do very quickly, and I don't know how you could do that a regular meeting between whatever.
Yeah, okay.
If you know what I'm trying to say, we've got to keep an eye on it. We can't just wait and then do it like that. That's what I'm saying.
I can try.
We are a long-term fund. We take decisions long-term, but if there is a major event, I will undertake or a major shift or change, I will certainly update the chair and officers. And I suggest that maybe they would then perhaps pass that update on to members of the committee.
And I can back further on that. And should anything be significant enough to need to be taken back to this committee urgently, we can arrange an emergency committee meeting. So there is a system and process in place. Okay, thank you. Lee, Councillor Waters.
Thank you, Chairman. What may be useful is if a regular fact sheet or info sheet came out to members, maybe once a quarter or a couple of months, just with an A4, here are some changes, here are some updates, just for people to digest.
We'll take that into consideration into account. Thank you, Lee. Yes, Chris.
Thank you, Chair. Can we just have an update, please, that of one of the to-be placed items, the review of the work of the Pension Fund Committee and Pension Board. This has been on the to-be placed list now for quite a substantial time, and we tend to get the comment is it's being looked at. Can we have a proper update, please? Thank you, Chair.
My comment on that, it is being looked at as part of the. It is being as part of the governance. We have a governance review. It's serious. It is a governance review. So I know that the city and us and other authorities are looking at changing the way we work. It's part of that process, and I can't guarantee it'll happen overnight, but certainly longer term we will have some feedback of how we're going to operate in the future. Thank you. Okay. Right. I don't see any other questions, comments. So we've moved the recommendation about approving the work programme. All those in favour, please. That's unanimous. Thank you very, very much. That brings us to the end of the public meeting. But before I move away, sorry. Oh, sorry. No. Apologies. Item number 8, fund valuation and performance for Q3. So this is again a historical report from figures at the end of December. Before I hand over to Tamsin, I'll move the recommendation on page 39. Can I have a seconder, please?
Reserve the right.
Thank you very much. Tamsin, do you want to take us through the report, please?
Thank you, Chair. This report is to inform the Nottinghamshire Pension Fund Committee of the value of the pension fund at the end of the latest quarter and provide information on the performance of the fund. The table in paragraph 3 shows the valuation at the end of December, at the end of September, and the value a year ago. The fund investments have increased by 139.8 million, which is 2.2% since the previous quarter, as the market has continued to grow. Within this valuation is 363 million of infrastructure investments, amounting to 5.5% of the fund. 7.8% of the fund is now committed to infrastructure investments, largely due to further commitments made to LGPS Central's new infrastructure fund. Paragraph 5 shows a more detailed analysis of valuations by portfolio, and paragraph 7 shows the fund account for 3 quarters of 21-22 and the full year figures for last year. Paragraphs 8 to 19 relate to the fund's holding in fossil fuel companies and investments in sustainable equities and renewable energy. And I need to make an apology. Councillor Kerry has brought to my attention that one of the numbers was not updated. The percentage figure for fossil fuels for December 2020 should be 3.9%. My apologies for that. There are a number of caveats that need to be understood in interpreting the disclosure on fossil fuels, and these are explained in the report, and I refer members to these. Over time, it's anticipated that fossil fuels will decrease as a proportion of the fund and that investment in sustainable equity and renewable energy will increase, but this long-term trend will not be smooth. At the end of December, we had an estimated investment of 155 million in fossil fuel companies, which is 2.3% of the fund, and sustainable and renewable energy investments amounting to 294 million, or 4.4% of the fund. Members are reminded that a more thorough assessment of our exposure to fossil fuels through our equity investments is provided by LGPS Central's carbon risk analysis, which assesses the carbon intensity and weight in fossil fuel and coal reserves, as reported to the meeting in November. The core index portfolio section reflects the equity market movements over the last quarter. The sales and purchases reflect the completion of the rebalancing commenced earlier in the year. The Schroders portfolio shows the regional analysis of the holdings and purchases and sales during the period. The LGPS Central portfolio shows further investments in the multi-asset credit or MAC fund. Aberdeen have continued to actively manage our property portfolio. The specialist portfolio section shows the composition and valuation of the specialist portfolio and the transactions during the quarter. There were new investments in listed property and listed infrastructure. The section on responsible investment activities summarises some of the responsible investment activity which has taken place during the quarter on behalf of the fund. Thank you, Chair.
Thank you very much, Tamsin. I must have to admit that it was Councillor Introna that noticed the figure earlier on. I would not like to take credit from Councillor Introna at this stage. Thank you. Thank you. Any questions or comments, please? Councillor Introna.
Yes, thank you, Mr. Chairman. Just on that item, so we've gone from 3.9% exposure to total fossil fuels to 2.34%, which is a 40% reduction in the year. And I think at the workshop that most of us attended, we recognised that there was a decreasing trend, and we made it very clear as a group that we wanted to see that trend continued, and where it was appropriate to do so, for that to be done with all the haste that we could. But I think given some of the previous comments, and maybe someone may look at the absolute numbers, which is clearly indicative of the share prices, you know, we've seen a 40% year-on-year reduction, and I think that needs to be recognised.
Thank you, Councillor Introna. Any other questions or comments in the open meeting for? I don't see any other hands, so we've moved the recommendations. All those in favour, please. Any against? So 1 against, no abstentions. Thank you, it's carried. Finally, well not finally, at the right time, I'm coming to item number 9, which is exclusion of the public, or the public in the gallery and out there in online. So we now move to the part of the agenda that proposes that we meet in closed session to consider the exempt information in relation to agenda item 14. I therefore invite the committee to resolve that the public be excluded for the remainder of the meeting on the grounds that the discussions are likely to involve the disclosure of exempt information as described in Schedule 12A of the Local Government Act 1972, and the public interest in maintaining the exemption outweighs the public interest in disclosing the information. I'll move that and ask for a seconder, please.
I'll second that, reserve the right.
And I'll ask for a show of hands, please, voting members. All those in favour? And that's That's unanimous. Thank you very much, and I thank the members of the public for being out there watching us today. Thank you.